Yeah, what I'm trying to explain here is the concept of double entry. Okay, so like I said, every financial transaction in the world will fall under these 5 categories. The transaction either has to do with an asset, creating an asset, or increasing an asset or decreasing an asset, making an expense increasing or decreasing, creating a liability or paying a liability, decreasing. Equity is the owner's capital, isn't it? Increasing or decreasing. You know, a drawings will decrease it. And an income, of course, will also either increase or decrease. So, if you want to understand the concept of double entry, you do it based on this. So, to say that, you know, in our days, in high school, we'll say you debit the receiver and credit the giver. That's what we learn, rote learning. But you cannot apply it in all situations. So a debit and a credit entry depends on these categories. And the line is drawn here. These first 2, assets and expenses, always have what? A debit entry. On your trial balance, an asset and an expense will always have a debit entry. Okay? A liability, equity, and income on your trial balance will always have a credit entry. So naturally, if you want to increase a debit entry, what do? You debit it. If you want to reduce a category, an element that has got a debit entry, what do? You pass the opposite, isn't it? You credit. This last category, which is the liability, equity, and income, by default, all of them will always have what? A credit entry on your trial balance. Okay? So, if you want to increase them, you pass what? A credit entry, a credit entry, a credit entry. And if you want to reduce them, you pass what? A debit entry, a debit entry, a debit entry. This is very, very important.